Stock market is all luck. Stock market is all gamble. Easiest way to financially get ruined passes through the stock market. We would have all heard this myth often from a lot of people. In fact, if you actually check the average viewpoint of people towards the stock market, most of them will come up saying this. That is the reason because most of them actually haven't got their research or knowledge about stock market. These people have actually been convinced that walking towards stock market is an algorithm to hell. So many people wonder that these handpicked people are the only ones who are towards the luck in this market, while most of them have losses. Few of them are there wondering if there are some magical formulas. I'm going to tell you a couple of mistakes that these investors end up doing when it comes to stock market so that even you can learn and understand. After watching this video, I'm very sure that there'll be a lot of investors who will be aware of these mistakes. I'll make sure that you guys are aware of these mistakes and do not commit it in the further notice. I'm Varsha and welcome to the Freedom English channel. Do not forget to subscribe and download our Freedom app. Stock market investors have to be logical and level-headed. They have to make sure that they choose between their intuitions and also their gut feeling. They have to juggle the feeling when the stock market keeps going up and down. By wanting to learn the starting and basics of it is a great way to start towards the stock market, rather than blindly investing in it. In this video, I'm going to tell you common mistakes that have been repeatedly happening in this market. First mistake is that have no plan. Usually, investors dive into this market without having a proper plan just by thinking that they have enough knowledge towards stock. Planning is the main foundation towards the building of success. That's why it's called a plan or a blueprint. Without having a proper insight about the market, nobody can just dive in and think that they might earn fortune in this. An investor with no plan does not know what to do. Investments are usually made in order to accomplish something or in the basis of financial plans. This is one of the main reasons a lot of investors have to understand. To make sure that you achieve a proper investment in a proper manner, he or she should have the perspective towards why they want to achieve this particular investment order. He or she needs to have a reason before investing. Why reason, you say? Because reason will give you a proper plan. This will give you a determination why you have to strive towards that plan and make the right choices. For some investors, it might be a retirement plan. Well, for other type of investors, it might be an education system for their children. For few, it might be a very short-term planning such as vacation. He or she must have the right knowledge and input about why they're investing in so-and-so securities just to make sure they have a proper returns as they expect. It's good if they know that how long they have to invest and how much they should invest when it comes to the securities that they have chosen to invest. They have to have the right knowledge and research about those particular shares so that they don't make the mistake of having no plan. Next one is going with the market trend. As the way I keep saying, it works in a particular business, but this does not work in the stock market. Stock market actually differs from day to day and time to time. This is one of the major market where your intuition and your gut feeling plays. You have to make sure that you have the right mindset to make such logical decisions. Some investors give too much knowledge to what is written in the financial media. These people always refer to the financial news which have just come out. This might be a lucky turn in some points, but this might also be an unlucky turn for a lot of people who just put in their investment trusting a newspaper report which has come a while ago. By investing in these so-called fancy securities, investor might also fall in a huge trap. When the speculative bubble bursts, that is where investors lose a huge chunk of money. Rather than just going with the market trend, they have to make sure that they have their own self-study before diving into a decision what has just come. People might tell you that invest in so-and-so. Advisors might be giving the things that they usually do. But do not always go on the blind side of this one, but also make sure that you have your own mindset while getting into this market. Next is creating a portfolio. Creating a portfolio for yourself is one of the good things, but also sometimes might not be what you expect. To be able to diversify the portfolio will help in cutting his losses and maximize his income. The main perspective of a portfolio is to reduce risk and make sure that you have great returns. It does not completely nullify it, but still it's one of the good things. Most of the investors commonly say that higher the risk, higher the reward. So in order to create that good returns, make sure you have a good portfolio. Next is depending on the investment manager. Having great confidence in the investment manager is actually good, but most of them suggest not to do this because it's always not the right way. Considering their ability to judge your management for the investment every time might not be a great idea. This can lead you to a major investment mistakes which can also affect your financial structure. Only investing in high performance securities. We all know that the present market might not sustain even for the longer term. Stock market is one of the things that cannot have a promising status of each and every security. Just because one particular type of stock is giving you a great return doesn't mean that this might continue for a long run. Before investing, by just checking if the so-and-so security is performing well is not the only way that you can overcome the situation. It is also important to consider whatever shares you're buying from a particular company is also performing in spite of the profit and losses it has been going through. It's usually based on its profit and loss statement, balance sheet and cash flow statement. And also by understanding the company, the way it utilizes the entire system of its funds can also give you a great returns when you think of the performance that you have to invest in. Next mistake is that disposing the stocks when the prices are failing. One of the most common mistakes made by the investors are that they dispose the stocks during the time of failing. Well, this might lead you to a huge loss because you never know what might come in handy. For example, when the Satvam shares started to fall, many investors made sure they disposed a couple of shares that they had in their hand. Some of them held on to it instead of selling. Well, few of them bought it at lower price. But the surprising part here was when they cut their losses when Mahindra took over Satvam. Well, on the other hand, investors who sold their shares had a huge loss. It is one of a really good things if you know the fundamentals of stock market as well as a particular company that you invest in. Sometimes price might fall in a short notice, but you never know when these might pick up. So this is where you make rational decisions and do not fall into the hands of loss just because you listen to the negative news of a particular company. Next is investing like gambling. Well, this is one of the most major mistake made by the investors. Gambling actually does not have any rules. So most of the investors invest in securities like as if they're gambling. They happen to randomly pick a security and if they feel that this is performing good, they just invest. This is one of the big mistakes when it comes to investing because I keep referring to the word called as research and have your own mindset. Only logical investors can win in this market. Random people who think about this as gambling can only succeed for that moment. This cannot happen in a long run. Next is it assuming to get the same profit as others. As I say, just because one particular share is doing good in the market doesn't mean that even other shares might. It's the same even for the investors. Just because other investors are earning great fortune in this market doesn't mean that even you can. I'm not saying luck might play in this market. Some investors make sure that they learn from other investors. The people whom they're learning from might be really experienced and they have a great knowledge about this market. So if you blindly think that whatever they invest in and you can also go ahead and invest in that, this might act as a lucky charm for once, but not every time. Over the time, you have to be independent and learn to invest on the knowledge and intuitions that you have. Most of the investors try copying the other investors. Copying can also be determined as bad. This word has also been bad since school till now. Stock market is no different. This is one of the most common mistakes made by the investor, thinking that copying might help them also gain the same returns what others are. This might not always work because the ratio depends on the number of shares. It might always depend on the number of shares an individual is purchasing. These are completely different and vary from one and another. Just because a particular investor is making investments depending on a particular ratio doesn't mean that it has to mean the same for you. There can be a couple of changes and there will be a couple of changes. So make sure what you're investing is not being copied by others. Being anxious or worrisome. Just because an investor makes some investment in a particular share doesn't mean that he or she has to keep worrying about that. They have to have their own peace of mind and make sure they have patience. They can't just keep worrying how much their shares are turning out to be and keep on checking the ticker. This is one of the emotional mistakes that an investor does. This leads to a lot of anxiety and might not give a great required results. Next one is overtrading. Just because you're in this particular industry for a long time doesn't mean that you have to overtrade. Sometimes keeping things in control is one of the best things that you can do for yourself. Most of the investors make sure that they don't trade as much as they do. Over the time, they keep decreasing because that's what gives you a great result, because that is what gives you a great time to think. Because trading a lot makes an investor lose money over fees. Last but not the least is getting greedy. Getting greedy is one of the things where half of them run towards this market. You cannot just dive into something that you have no knowledge about. It's like diving into an ocean without knowing how to swim. This is where a lot of them drown. Greed is something that most of them cannot control when it comes to the looks of money. That is where few of them go wrong. Their emotional status is not under check and their vision of success is entirely different. In order to invest, they must have confidence in the shares that they are investing. Just because the market is performing great in one particular securities does not mean that you have to be greedy enough to directly invest in them. Research is something that you have to do for yourself before just randomly investing and losing a huge sum of money. Usually, once the investment starts doing well in the particular share they have invested, this is where the investor puts all the eggs in one basket. This actually might cause a serious damage where the investor might actually go wrong. So therefore, it's not that great to be greedy. So bottom line is that in order to avoid mistakes, one must know the knowledge about stock market. One should make sure that he or she doesn't have only theoretical knowledge but also some practical experiences. Making mistakes is not something bad, but repeating the same common mistakes is something called as dumb. Above all, one should be patient and have faith in one's ability. Usually, these people are the ones who ignore rumors as well as others' advice. Sometimes take advices because this might do wonders to you, but not all the advices because you never know where the others might lead you to. So if you think you found this video helpful by not making the mistakes that I have mentioned in this video, please do not forget to like, share and subscribe. Also download our Freedom app which can give you a basic idea for your backup of money. Thank you so much.